Hello, everyone. Welcome, welcome, welcome. So, we are back with our weekly recap. This is our first recap of 2026, and I'm really excited to be here. And before we jump into today's conversation, I want to do a quick reintroduction or introduction. I know I have quite a few new subscribers who may not know who I am or my background, so I figure we'll kind of talk about that first. Then we'll talk about what this segment is all about. And if you have any questions as we're going through the segment, feel free to leave your comments and questions in the chat if you're here live. If you're watching the replay, definitely leave your comments. I'll come back and answer them so we can have an engaging conversation. So, first things first, welcome. My name is Bella Jones. If you're not familiar with who I am and what I do, I am a corporate finance professional with over 19 years of experience. So, I have my bachelor's of science in finance, I have my master's as well, and again, 19 years of corporate finance experience. So, with this expertise, I'm very well versed in reading financial statements, analyzing data. I can do this in my sleep. And so, the reason why I began this weekly recap segment is to help my audience understand a bit more about researching companies before they invest. What should you look for? So on and so forth. I know for a lot of people, they know in their minds that they should research a company before they invest, but most don't. And there's usually a few reasons for that. So, one, when you hear do your research, well, what does that mean? What am I looking for? Where do I find it? Right. So, that's usually the first part. And even once you attempt to do that, what does all of this mean, right? And so I'm using my platform to kind of simplify that process to make it less complicated, less overwhelming. So investing can be a bit easier for you to navigate as you're going through your wealth building journey. So that's the purpose of these weekly recaps. So there are two parts to the segment. So the first part, I usually will do a recap, hence the name of of the segment, of what financial news have happened or occurred in the week that I think is important, just from a consumer standpoint, from an investor standpoint, or what's trending. So that's usually the first part of the segment. The second part of the segment, we tend to then roll into the earnings calls that happened in this previous week. Now, the reason why I focus on earnings calls is it usually gives you a good snapshot of what is happening with various companies throughout the month. And the reason why earnings calls are important, it's where companies are giving you their financial report card, right? They're telling you how well they did or didn't do. You will then understand, well, what happened, what went well, what didn't go so well, and what are they projecting for the future. And that part is really important. It's very telling. It helps you understand, well, what is this company doing with my money, right? Because when you buy a stock, you're essentially handing money over to a company and you're trusting them with your money, right? Hey, Lisa, so good to see you. So you're trusting them with your money. And so these earnings calls, your opportunity to understand what are these companies doing with your hard earned money. Or conversely, it could be, well, I'm interested in this company. How are they handling their investors' money currently? So that's why earnings calls are important. But I know for most people, they are intimidated by it, right? You'll hear these analysts or the CFO talk a lot of jargon, and sometimes it's hard to follow. As someone who's in finance and have been for like 19 years, some of it is boring. And so I am using this segment to kind of simplify what is being discussed in these earnings calls. And also, we will focus on or talk about things you should pay attention to when you are, if you decide to listen or read a press release. Now, the reason why that's important is when you're doing research, for a lot of people, it's like, well, what am I looking for? And that's a great question. So I recommend having your own investor checklist. So what does that mean? That means as an investor, you should have 3 to 5 things that you are looking for as an investor. And I always equate it to going through a job process or looking for a job. No one, well, in most cases, no one hands you a job, right? The company puts you through a vetting process. So you'll apply for the job, submit your resume. You might do a screening with HR. You then might go through a few rounds of interviews From there, they may do a background check, check your references. And once you've checked all or most of those boxes, then they offer you the job. So, this is how companies vet you as a candidate before they hand you a job offer. So, as an investor, you should be doing something similar. Now, it could be a lot simpler or it could be more complicated, whatever your process looks like. But you should be using some kind of process to vet a company before you make the investment. Now, unfortunately, most people either aren't doing research at all or they research after they've made the investment, right? And so I want us to get more intentional or become more intentional with our money as we are investing with different companies or different assets, etc. So what should your investor checklist look like? Well, it varies from person to person. So, for example, you might look for a company whose revenue is increasing year over year or quarter over quarter. That might mean to you or signal to you that this company's services are in high demand or product. It means they're doing well. Or you could be looking for a company who has increased their profits, right? Revenue and profits aren't the same. Or you might be looking for a company that pays dividends, right? So, dividends is kind of a good indicator for a couple of reasons. One, it creates income for you as an investor, but also when a company is paying dividends, it usually means they are a more established company. They kind of have a good position in the marketplace. It also means they have enough cash on hand to pay dividends to investors. So, these are things you could be looking for as an investor. Now, as you become more sophisticated as an investor, your checklist could be more intricate. You might care about earnings per share. You might care about how much cash they have on their balance sheet. There's lots of things you could have on your checklist, but in the beginning, starting out, you should have 3 to 5 things you're looking for. And over time, you'll then figure out what things are important to you, right? My checklist will look different than yours and vice versa. And it should, right? So, getting back to the point, the purpose of this segment is to get us into the habit of understanding how to research companies. What does it mean when you're looking at certain things in their financial statements? And I want to keep it simple so it's not overwhelming for you if you're not a finance person or a numbers person, per se. So that's the purpose of this weekly recaps. This is our first one for 2026. So we are going to jump right into it. And so I'll go back to what I was saying before. For the first part of the segment, we're just doing a recap of important things that happened throughout the week. And then second half, we will talk about the earnings calls that I thought were important that just occurred in this previous week. So first thing starting out is tax season is almost here. So the IRS announced that the first day you can file your tax return will be Monday, January 26th of 2026. And for most states, they will also open their tax filing acceptance on that day as well. So, for in case anyone was wondering, that is one of the big headlines that did come out this week. Next thing, we did have a positive vote on the Obamacare subsidy. So the House did vote earlier this week, and they did pass the latest bill that would extend the tax credits on Obamacare healthcare for a 3-year period. Now, we all know, if you didn't know, at the end of 2025, the House and Senate were pushing to pass a bill that would extend these credits that would then make monthly healthcare premiums more affordable for people who are using the ACA to pay for their healthcare through the marketplace. And so if these credits are allowed to expire, it will cause people's premiums to increase significantly, in some cases up to 700%, which is astronomical. So we aren't in the clear yet. It just passed through the House, so it will now move to the Senate for a vote. But from what I've been reading and from what what I surmise from what I've seen online is that there isn't high hopes for this passing in the Senate, but knock on wood, miracles can happen. So we will see how that goes. Big thing for this month. The federal government is now pushing forward or moving forward with garnishing wages for anyone who has defaulted on their federal student loans. Yes, federal student loans. We're back to this conversation again. So, if you are someone who has a federally backed student loans, and if you have not made a payment in 270 days or 6 months, they are going to move forward with beginning to garnish your wages. So, well, not only that, but also intercept any monies that are due to you. So, for example, if you end up filing taxes and you are due a refund from either the federal or state government, and if you are that person or a person who has defaulted on your loans, they will intercept those refunds and apply it to whatever balance that you have. Um, in terms of wage garnishment, they will send you a notice and give you 30 days, or I believe 45 days, to get your account out of default status before they begin garnishing your wages. Now, they can garnish your wages up to 15%. So you do have a little window to kind of avoid the garnishment. Now, a couple of options. I did put a post here on YouTube, but also on my Instagram. There are a couple of ways you can avoid the garnishment. Of course, the first way is to get your account out of default. Now, getting your account out of default doesn't mean you have to make a payment necessarily. It does mean that you can, there's a couple of options. You can renegotiate your loan term with your service provider. You can consolidate or rehab your loan to kind of restart the clock. Or you could set up a new payment term so you can lower your payments. But if you are unemployed and have been for quite some time, if you do sign up for one of these new plans, your payments could be zero because you have no income. So, something that you should not be avoiding because they are coming for their money. We've been able to delay this for what, five, almost 6 years now, but the money's due now, unfortunately. So, that is the big thing. So, oh, I forgot one more thing. You do have the option to request a hearing. So, if you do not agree with the wage garnishment, you can opt for a hearing and notify the judge that this will cause financial hardship, and they can, deliberate on what that means for you. And there's two outcomes. If you win your hearing, they will delay the wage garnishment for a year. If you lose your case, then they will start the wage garnishment. So those are pretty much your options. Or of course, obviously pay your loans in full, then you have no loans, but who has that? Anyway, so, other big thing that I found out today. Now, I know Saks Fifth Avenue has been struggling financially for quite some time, but rumor has it that they plan to file for bankruptcy this weekend. They are like $1 billion in the hole. And this also is due to their acquisition in Neiman Marcus back in 2024. So right now they've missed their monthly interest payment of $100 million that was due on December 30th. It did not make that payment. So right now they are basically scrambling to get financing, and they need 1 billion to kind of keep the company afloat. If they aren't able to secure that financing, they will ultimately end up filing for bankruptcy. And I find that kind of ironic because I've been getting tons of emails from Saks for the last like 30, 45 days. They even sent me a 25% coupon off of a full priced item. I don't think I recall ever getting a coupon like that from Saks. Now, Saks off Fifth, like they have this kind of products and things like that, but very rarely does Saks send you like a random coupon just because. So that to me is very telling. So if you are someone who's in the market for something special and you have some money to spend, you probably can get something really good at a big discount from Saks. I think it also includes Bergdorf, Goodman, and Neiman Marcus. So anyway, that's what's going on with that. So we will see if they do end up filing on Sunday. I did also hear another rumor that they may deliberately wait until January 26th to file for bankruptcy. The reason behind that is if they have a vendor that they owe money to and the balance is less than 30 days old, that creditor then gets pulled into I'm trying to make sure I'm saying this correctly. They then become someone that has to get paid in bankruptcy court. If it's past that 30-day time window, then they're not part of the set of creditors that have to get paid. So they are trying to basically not pay any vendors who made sales and shipments during the Christmas holiday season. Hence why they're waiting till January 26th. That's the rumor I heard. Don't know how true it is, but Saks is definitely in financial distress. So those are the main things that I saw this week that were trending or really important. Of course, we have this situation in Venezuela, but I try to avoid the politics conversation. So we will just move on from there. Now, in terms of earnings calls, it was a pretty quiet week. There weren't any big companies that had an earnings call this week. So it was very slim pickings, if you will, but there were a few. So I am going to hold on one second, making sure that, okay. I'm going to share my screen and we will jump right into it. So the first company that we are going to talk about is called Penguin Solutions. So Penguin Solutions is a company that designs, builds, deploys, and manages AI infrastructures. And let me make sure you guys can see my screen. You can. Fantastic. I have so many tabs open right now. It is crazy. Oh, what just happened? Okay, here we are. No, it's doing something. What's going on here? Okay. So I'm just going to scroll all the way down to their income statement. And just to level set everyone, their earnings call that happened this week was their Q1 2026 release. Their Q1 ended November 28th of 2025. In case you didn't know, not every company has a fiscal calendar when it comes to their financial calendars. Not all companies do their calendar from January to December. They definitely do vary from company to company. So you will notice that the quarterly earnings calls will be sometimes different, even though we're all reporting on the same numbers. So, okay, so going all the way down to their income statement. So here we have their total net sales, which is revenue. It's only up 1% year over year. So we're looking at Q1 of 26 versus 343 here versus the 341 from November of 2024. So it's only up 1%, so not stellar results by any means. And then we're going to skip everything else in between for right now. The next metric is net income. So that basically is your revenue minus expenses, and then you have your net income or net profit or loss, depending upon the situation. So they had positive net income, but it definitely, wait, hold on. Is this? I think, okay, yeah, this is not what I was looking at earlier. Hold on. Okay, this is what I was looking for. Net income available to common stockholders. So it's down 62%. So definitely not what you want to see as an investor. Now, there were a couple of things that drove these results. They did have some no, hold on a second. That's the next company. Disregard that. So they didn't have stellar results by any means. And one thing you'll notice that reading these earnings calls, when the results are less than stellar, they tend to just gloss over the why. So if you see here, they're just talking about continuing to, shift their priorities, focusing on strategy, scaling deployments and things like that. So they're very much forward looking at this point because they didn't have a good one. Revenue was basically flat year over year. Net income is down significantly. So there isn't much positive stuff going on right now, but they are going to be leaning into, of course, AI, the infrastructure. That's very much a booming market right now. And I believe I read somewhere in here, I don't think I see it now, they are also going to focus on the AI optics space. So as we know, for example, Meta, they have a huge push on their Meta glasses. I think one of their partnership is through Ray-Ban. And so the AI glasses, that's one of the niches that a lot of people are focusing on. And this company is definitely relying on that to help increase their revenue. So definitely not surprising there. Let's now look at their stock. I have way too many tabs open. Hold on. Let's close some of this stuff here because it's going to make it really hard for me to see everything. Okay. So I'm going to stop sharing. Do I want to stop sharing here? No, actually, let me not do that. Let's just do. Let's just jump right into it right here. So the next part that I like to look at when we review these earnings calls is to see how the stock price performed after the earnings call. Now, usually it goes one of two ways. This is not 100% accurate all the time, but this is the general trend we tend to see. So when a company has an earnings call, then Wall Street responds. And so if a company had a great earnings call, meaning they had great revenue results, they had great profitability, they have lots of positive things going on, you will tend to see the stock price will increase. That's usually what you will see. Wall Street loves that kind of information. If they have a less than stellar earnings call, meaning like in this situation, revenue is flat or revenue is down, or they are not profitable, the stock price tends to decrease. Now, we have seen situations in previous recaps where a company had a great earnings call, but the stock price still took a hit. So there's never an absolute in anything when it comes to investing, but you will notice trends along the way. So if we look at the last 5 days, it's pretty funny. Whenever you see these graphs, this is Yahoo Finance, by the way. I would say Yahoo Finance is one of the best tools when it comes to doing quick research, especially if you're on your phone. They give you a lot of information in just a snapshot view, which I really do like. So here, when you see this chart, I'm laughing because if I didn't know when the earnings call happened, I can tell by looking at this chart. So as you can see here, the stock nice steep dip, say that 10 times fast, on January 7th. So that's pretty much when they had their earnings call. Wall Street responded. So the stock price is down about 6% this surprising, right? They had less than stellar results. They're not decreased profitability. So Wall Street doesn't have much confidence in them, at least for this week. So hence why the stock price is down. Now, what I like to say as an investor, a stock price takes a hit, that doesn't always mean it's a bad investment, right? There are ebbs and flows when it comes to the market. But if you have a company that you believe in, meaning you believe in their product, you believe in their service, you believe there's a long-term trajectory for this company to do well, and the stock price takes a hit, that could be a great opportunity for you to buy the stocks, I say, like on sale. So never correlate something like this, meaning to mean that you should sell a stock automatically or it's a bad investment. It's never so absolute. It's never just so black and white. Again, there are always ebbs and quarter snapshot of what happened in the last 3 months. They could turn things around next month or next year. You just never know. So just never see this and automatically panic. That's not the way you should approach investing. So next up, we have Albertsons. Now, Albertsons is a grocery chain. We don't have them here but they are, I think, pretty much. Lisa says, never heard of this company. Me neither. I didn't hear about them until today when I was doing my research. When I say it was slim pickings this week for the weekly recap, it was really slim pickings. So I had to like dig deep to find companies worth talking about. So, but we all learn something new every day, right? Okay, so next up we have Albertsons. I'm just going to pull up their press release and I'm just going to pop it in the screen since we're already here. Is it going to put me right where I left off? Yeah, I think so. Okay. So I'm just going to skip all of this here and just jump right into their consolidated income statement. So here we are looking at what did we just say? I think this is their, hold on. This is their Q1. I think this is their Q1 press release. Let me make sure I'm saying that correctly. I think so. So if we look here, their revenue is up 2%. So we're looking at, no, this is not, this is their Q3. This is not their Q1. This is Q3 for Albertsons, excuse me. So this is their Q3 of this year versus Q3 of last year. As you can see, it's relatively flat. It's only up 2%. And if we scroll down here, we are looking at their net income. It's also down about 27%. Now, for Albertsons, what they were struggling with this quarter is they had store closures, which of course is going to impact their revenue and sales negatively. They also had lower fuel sales. Had less fuel, lower fuel sales, had sales, it impacted their margins or profitability as well. They also talked about the delay of SNAP benefits negatively impacting their revenue. So if we all recall back in before, we had this SNAP benefit debacle where no SNAP benefits were available for like almost 30 days due to the government shutdown. And so one thing that people weren't really, well, I shouldn't say that. People were talking about it really on TikTok, I should say, is that, you know, the consumers or the benefits were negatively impacted. This also negatively impacting corporations. Corporations rely heavily on SNAP benefits in terms of revenue. Stores like Walmart, Target, grocery stores, they rely on these revenue. And so when there was almost like 30 days or more, I believe, of no SNAP benefits, meaning people were not spending money, they weren't making those sales. So Albertsons also took a hit because of that. Now, they also had low margin or low profitability. They are investing in their business transformation. So they're trying to find more efficiencies in their business. With the grocery business, they already have low margins to begin with. So they have to get very creative when it comes to how they sell, reduce costs. So they're kind of investing in business transformation to reduce costs in the future, but they have to make the investment up front. So that's kind of what they have going on. So let's go and take a peek at their stock price. I did not look at their before right now, so we're going to all do this live together. So if we look here, same scenario. If you didn't know when the earnings call was, you definitely can tell by looking at this chart. For the last 5 days, the stock is down about almost 4%. And this is no surprise. A slight dip, nothing too crazy, but of course, based on the less than stellar revenue results plus the decrease in profitability, no surprise here that Wall Street did not respond positively. Now, kind of also just going back to Yahoo Finance and what you see on their platform. So they will give you great information such as a 52-week range. In case you don't know what that means, that's going to show you the lowest price this stock has been and the highest price this stock has been over a 52-week period or 1 year. You also will see things such as when the earnings call happened. It happened January 7th, as we can tell from the chart. It also tells you if a company pays dividends or not. So it's pretty simple. If you see an X dividend date listed, that means the company does in fact pay dividends. And you can see how much they pay for the year. So Albertsons pay 60 cents, not, average, barely, but it's something, I guess. And you also can see the history of dividend payments as well. So if you were to go to historical data and you just filter on dividends only, you can then see what their dividend. And right now we're filtered on the last 12 months. You can go back, I think, as far as like 5 years or so and see the full trend of dividends. As you can see here, it's increased steadily over time. I'm not sure why there's this big payout in October of 2022, but for the most part, you can see a slow increase since 2021. All right, so last but not least, we have WD-40. Now, yes, WD-40 is the company that sells like the spray, the oil in the can that you use to spray your car or the hinges of the door in your house. Yeah, that company. Like I said, it was slim pickings this week, guys. So they actually had a really nice presentation, and I will just share that quickly here. So they had a really nice presentation, which is nice for investors. That, and we'll jump right into their Q1 results. So revenue for them, or net sales, same thing, is up 1%. Net income is down 8%. Now, part of what's driving the lower sales, they did sell a line of business that wasn't doing so well. So that, of course, impacted sales. And they just seeing a lot of pressure in terms of pricing in the overall market, which is not surprising. They're an international company, so tariffs definitely has been an issue for a lot of companies, which is going to impact your profitability. So they are just navigating that. And not much to talk about, truthfully, when it came to WD-40. But I do want to look at their stock, because I also did not look at this stock before the live stream. So let's take a peek to see. What is their ticker symbol? Oh, here it is. It's right here. There it goes. That's pretty hefty. Their stock performance over the last 5. No surprise here as well. The earnings call was on the 8th. Street responded. The stock is down about 3% this week. And again, they had less than stellar results, so that definitely is no surprise. And they do pay a dividend, but also very below average. It's only a 1.9% dividend yield. So that's not very impressive. But anyhow, so yeah, that is it for the earnings call portion of this weekly recap. Again, very slim pickings this week, but I think it's also an opportunity to learn about new companies that we never heard of. Like, I never heard of Penguin Solutions before. I've heard of Penguin. They sell books. You know what I'm talking about, right? Penguin. Now I have to Google it because now it's going to drive me nuts. Hold on. Penguin. Yeah, Penguin Books, right. That I know about them. So when I first saw this company, I thought it was related to the books, but it wasn't. This is Penguin Solutions is an AI company. So I learned something new today. Albertsons, I can say I would look at Albertsons as an investor, but now that I researched them today, we may pay attention. We'll see. And then WD-40 was never in my purview either. So these are 3 new companies to me to kind of pay attention to as an investor. And this is why, we had this segment. Not only are you guys learning, I am learning as well. And when it comes to investing, no one knows everything, right? Part of this journey is learning and educating yourself and just being fluid in your thoughts and being open to learning new things, right? The investor market has changed. The landscape has changed drastically in just 5 years. Crypto is more mainstream. Before 2020, it definitely was not. People have more access to information. There are more apps to make this information more accessible. And so at this point, I would say the excuse "I don't know" really isn't a viable excuse. If you don't know certain things, it's because you're choosing not to learn. Now, there is a lot to learn, of course, so you want to meet yourself where you are and take baby steps to learn more information. But just to sit in the ignorance really should not be. There's so much on right on these fancy schmancy phones. Two, you have the ability to learn. You can learn for $9. There's tons of resources. I know like Lisa J has her YouTube channel. I have my YouTube channel. There's plenty of places you can find information. There are paid resources too. I do have an ebook called Stock Market Investing for Beginners. It's a great resource to help you embark on your investing journey. And I wrote the ebook to keep it simple so it's not overwhelming and so it's not intimidating. So there'll be a link in the chat or description if you want to check that out. But yeah, there's so much information. So it's really up to you to decide if you're willing to take that first step to learn. And if you are someone who is already investing, if you have a 401k, a 403b, you need to make it your business to learn at least a little something. So that way you can understand what's happening with your money. Where do you have your money? Does it make sense to keep your money there? You'd be surprised at how many people have investments, which is great, but they have no clue what they're invested in or why they chose certain things. They don't look at their portfolios. You'd be quite surprised. And I get it, right? Some people have the premise that, well, if I'm investing, that should be good enough. We'll just hope for the best, right? And so the fact that you are investing is definitely half the battle, but you can't leave it to happenstance because it's your money, right? You're working hard, or if you're retired, you worked hard. You should kind of want to understand where your money is going, and not for nothing. That means Lisa J says agreed, right? I know you have stories. We have to do a collab eventually. I know you probably have tons of stories as well. But you are basically handing money to these corporations and you're trusting them blindly. That's a scary proposition. So when you start thinking about it like that, it's your duty to kind of pay attention to what's going on with your money. Lisa says, don't be in an underperforming target date fund. The target date funds is the default that a lot of people gravitate to because it's easy. And it's usually the worst place to put your money. So, but one thing I will say, just to kind of premise, I am not a financial advisor. I'm not a stockbroker. I have corporate finance experience over 19 years. So when I'm sharing information, it is to educate you and to enlighten you, but you still have to do your due diligence to kind of do your research. And you could work with a professional if you so choose. But most times, if you just learn, you can do it yourself and avoid paying those fees. Lisa says, I don't think people even know there are other options. That's the part that's scary. So to kind of talk about what Lisa is referencing in the chat, when you sign up for your 401k plan at your employer, if you yourself don't pick or decide where the money goes, they put you in a default target fund based on your age or your projected age or year to retire. And those funds they usually aren't the best performing funds of where to put your money. Now, the one thing I will say when it comes to 401ks, companies don't do a good job of pushing you to learn. I have seen more companies, particularly those that have Fidelity as their provider or servicer, they do offer, classes. They sometimes will bring people into the office to talk to you and educate you, but that still requires you to take the initiative to attend said webinar or to attend said lunch and learn or whatever the case may be. So, and if you have a busy career, it's hard to take that time for the webinar and the lunch and learn. So I definitely understand that, but you have to be more proactive when it comes to your investments because again, it's your money. And so if you can start with small baby steps to say, well, Let me learn what an index fund is. That will make lots of progress for you. Just learning that small piece, right? And then just understanding dividends. Do I care about that or do I not? Right? There's things. So, but we can't keep guessing. People are using their portfolios like they're at the casino, right? I've seen people, you know, bet on Dogecoin or Ethereum, and then that's it. They're just riding that wave and not putting their money anywhere else, right? So that's by itself is problematic if you don't know what you're doing. So anyway, point being, educate yourself, learn what you can, and give yourself grace too. Just know that you don't know what you don't know, but you can choose to learn more. And you make mistakes along the way. It happens to all of us. But the more you learn, you'll be making more educated guesses versus winging it, essentially. So Lisa says, even using a fund that doesn't match your age can be a huge improvement. That part, more aggressive, not so heavily weighted in bond. Yes, the bonds market. That could be a whole separate live stream. But yes, I agree with everything that you said. And you are 1,000% correct, Lisa. 1,000% correct. So with that being said, I'm going to stop sharing. So that is it for this week's weekly recap. So the plan is to resume this series every Friday, 8:30 p.m. Eastern. I'm really working on being more consistent on YouTube. I did hire a virtual assistant, and I'm so happy about that because now I can be more productive and show up more consistently in all of the places where I need to show up. So in case you guys didn't know, besides YouTube, I have a big presence on Instagram. That's usually where I'm posting and hanging out in my stories and things like that. I'm also on TikTok. I'm on Threads. I'm on Facebook. Where else? I'm on LinkedIn as well. But on LinkedIn, I do focus more on my corporate finance consulting, I should say. So I don't talk about personal finance on LinkedIn, but you can find me on LinkedIn as well. You can kind of see my credentials and all that other good stuff. So I'm everywhere. I have lots of platforms, and it's been quite difficult to manage it all. So I have a VA now, and I'm looking forward to having them on board. They onboarded earlier this week. And so the goal is to now be more consistent in where I show up because I am pretty much everywhere. I am pretty much everywhere, and it has not been easy, but I need to be where you guys are. I need to get to as many people as I possibly can, hence why I try to be everywhere. I'm no longer on Clubhouse. I stopped that like 2 years ago. I'm not on X anymore because Elon, if you know, you know. But everywhere else, I am. So if you search Bella's Credit Corner, I'm there. I'm on Lemonade as well, in case you guys care to follow me there too. But yeah, Lisa says, please share your TikTok name. Actually, hold on one second. I will put all of my socials in the chat, but it's just Bella's Credit Corner. I make sure to kind of keep my trademarked name everywhere, but I'm not Bella's Credit Corner on LinkedIn. I'm just Bella Jones on LinkedIn. But I'm also on Pinterest, but I don't post there anymore. So you won't really see much there if you were to look me up on Pinterest. But I have a VA now, so I'm looking to change that. So we will see. I'm just really excited for 2026 and what's to come. Hold on a second, guys. I'm just trying to only put the ones that, like, I'm removing X. I have a whole list of my social media handles. And are these all the ones we talked to? I don't have Threads here, but I don't think anybody really uses Threads, so it doesn't really matter. So that looks terrible. Hold on. Okay, I can't just do a simple copy paste the way I want. So I will do it like this. So where are we? Oh, what is happening here? Okay, so there's my Instagram. Here's my TikTok. Then here is, did I mention Facebook? I don't know if I did or not, but I'm there too. Where else? Where else? Here's my LinkedIn. And, well, YouTube are kind of already here. Yeah, I think that's it. Those are all the ones. Those are all the places where you guys can find me. So definitely feel free to give me a follow. Definitely let's connect. And Lisa, I'm going to DM you on Instagram in just a little bit so we can chat some more. Maybe you can do a collab sometime next month or in Q1, whenever you are available. So with that being said, thank you, Lisa J, for hanging out. I so appreciate you. For anyone, I know there's people here who are pretty quiet in the chat, but I see you. Thank you for tuning in. And we'll be back here next week, same time, same place. Have a great weekend, guys, and we'll talk soon. Take care.